What's going on, guys? It's GBP baby. Welcome to a trade execution video. So you'll see we're just trading into this breaker. We've got a low, a high, a lower low, and price is broken to the upside. So we're just going to let it trade, and then we're expecting to run higher back towards the Asian session. So we entered on a fair value gap and a breaker coupled together. After breaking market structure, we had a shift here. So this swing high got taken right here. So now we can anticipate a move away from that, with dollar also reacting nicely off its own breaker as well, and trading into a fair value gap. So yeah, we should be all right. And then dollar should be reaching down towards these highs over here. So as dollar trades down towards here, we can be in our long position on euro with the expectations trade back into that Asian consolidation right here. So that's what I have my eyes set on right now. Just give it a chance to catch itself. You can see we're filling that fair value gap completely. Stop loss can be at the midpoint of this, and our take profit can be above these highs up here, because we anticipate a return back to this. Wow, we have a consolidation here, but yeah, we'll see how we make our way up there. You see that I've also delineated London's high above here, and then we have Asia's low right here. Now we haven't taken out Asia's high, which is interesting. Whether we reach up there or not is another question in itself. But generally, I'm expecting continuation to the upside. Let's see what GBP is doing. You can see we're just consolidating quite heavily on GBP. Nothing too fancy. We'll go to the 5 minute. And we should be able to find a fair value gap that price may want to trade into. So we have a slight gap here, we have a nice fair value gap up here, so we can use this as a potential draw for price. So let's get rid of the Asian range just to clean up our charts a little bit. We'll get rid of this as well, and see if price can reach into that premium fair value gap. And then what we can also mark out is if we look at the quarter range of London, you'll see our price treats that as a support level as well. So let's just get that delineated. So right here, drag that down. You'll see our price has used that to propel itself higher, which is quite interesting. So all of these come into play when we're looking at price and how it works its way through the ranges and reaches for liquidity. You'll also notice that this is what we call third stage accumulation. So we do have a breaker here before this low. We've got a low. This here is a breaker because we've got a low, a high, a lower low, and then price broke higher. And you'll see how price returned into this 2 times. Tapped into it once on the way up before it broke market structure, before the shift happened, and it comes back down one more time right before 8:30 news, wicks down into this order block. So this is first stage. This is first stage accumulation, second stage, third stage, I believe. See Dixie should be rallying lower, and like I said, heading for this high. Now, why is dollar going towards that high? Well, we have a low, we have a high, we have a lower low, and then price has moved higher since. So this level should be considerably sensitive to price. So I want to see how price reacts when it gets there. We should get a nice bounce, a nice reaction to continue to trade higher into the new day. So that's what I'm looking to happen, preferably. And in terms of euro, there is relative equal highs up here. I don't know if, to be honest with euro, I'm not sure where we're going to trade to. Like I said, this fair value gap is up here, so that's where I'm going to let go of my position. But just to keep it simple, you'll see we've just traded to that London high now, this level, so we anticipate support to be found at that level. Nothing to be concerned about. We can also move our stop to break even, because price shouldn't need to come back down here. And we can grade even these quarter grades, we can grade them again. So like we can split this in half like that, and then move up to the minute. You can see our price gaps at these levels as well, which is quite interesting. Another thing we can do is we can grade the actual swing, so from this low to this high. If we put the trading range, you'll see we can grade it up to -1, so we anticipate price to want to reach that. But we'll close out some of our position right here. See where dollar's at. Dollar's being beautifully lower, so we're taking out that high. So let's close off, let's at least close half of our position just to pay ourselves. So we buy back 5,000. Oh, we've got 20,000. Buy back. Oh. Whoops. Good job. This is demo. I meant to sell. So we should sell 10,000 there. Whoops. Sorry, guys. But the point is that I took out a partial there. I didn't mean to buy that. But you can see our price reacts off of that beautifully. And then we can watch it make its way up. This is a demo, by the way, guys. Paper trading. So no need to just try not to make those kind of mistakes. Now I'll allow for price to find support at this level. Any lower than that, and I'm closing my full position. Right, so I'm gonna close out on my position now, and that's everything. So ignoring the accidental buy right there, you know, this was a nice easy run. Came down, fair value gap coupled with a breaker. You can see we graded our way through the London range. You can see we've already traded down to here, so we've had a break in market structure, a shift in market structure. Price comes down, offers you buys. Then we have the news release, expansion, running out buy stops, creates fair value gap, classic entry right there. And then we bought up into the buy side liquidity residing above this swing high. So hope you found that insightful. Yeah, and I'll catch you guys in the next one. Peace.